Imagine waking up tomorrow and finding out that your job has been replaced. Not by another person, but by an AI that works faster, never sleeps, and makes decisions without any mistakes. This is not science fiction. This is what's happening to financial analysts on Wall Street right now. Let me tell you exactly how. Welcome back to Finova XI, where we bring you the most powerful insights about money, investing, and the AI revolution changing our world. If you're new here, make sure to subscribe because today's video might change the way you see your career and your investments forever. Today, we're going to uncover how AI is replacing traditional Wall Street analysts, why banks like Goldman Sachs and JPMorgan are investing billions into AI models, and what this means for your future, whether you're an investor, a finance student, or a professional looking to survive the AI revolution. Imagine this. It's early morning in New York City. The sun is just rising over the skyscrapers of Manhattan. Inside one of the tallest buildings on Wall Street, a young financial analyst named Eric is already at his desk, sipping burnt coffee, scanning 3 monitors filled with charts, price tickers, earnings statements, and news headlines. He is under pressure. Today he has to recommend whether their investment firm should buy, hold, or sell stocks worth over $200 million. His boss wants his final report before lunch. Any mistake could mean millions lost or millions gained. He wipes sweat from his forehead and types faster, running calculations, reading earnings calls transcripts, checking CEO interviews, reading quarterly reports, and trying to connect dots within an impossible deadline. Now imagine on the 54th floor of the same building, there's a new team that doesn't even drink coffee. They don't even blink. They are quiet. They are not humans. This team is a server room filled with AI models trained on decades of financial data, sentiment analysis, market cycles, earnings statements, geopolitical news, and even tweets from market influencers. These AI models analyze in seconds what Eric would take weeks to process. They don't get tired. They don't miss anything. They don't make emotional decisions. And they are becoming the new analysts of Wall Street. Artificial intelligence is no longer just a tool to speed up calculations. It is becoming a direct replacement for the traditional financial analyst role. In the past few years, investment giants like JPMorgan, Goldman Sachs, and Morgan Stanley have invested billions into AI systems that can read financial reports in seconds, scan market sentiment in real time, and even write analyst reports summarizing the risks, opportunities, and recommendations. Bloomberg has developed its own Bloomberg GPT, a large language model trained specifically on financial data to generate insights, automate report writing, and predict trends with greater accuracy than most junior analysts. But why is this happening? Why are these firms replacing human analysts with AI? The simple answer is speed, scale, and savings. An AI model can read every earnings call transcript of S&P 500 companies in under a minute. A human analyst takes hours or days to read just one. AI models don't need salaries, bonuses, health insurance, or coffee breaks. They don't resign or take sick days. For financial firms, it means massive cost reduction and higher efficiency. Some argue that AI will never replace human intuition and judgment in finance. But the reality is that financial analysis is based mostly on data, logic, and pattern recognition. Exactly what AI excels at. For example, BlackRock uses AI models to analyze global economic data and optimize its massive investment portfolios. Bridgewater Associates, the world's largest hedge fund, uses AI to simulate market conditions and test their trading strategies before risking real money. Even retail trading platforms now integrate AI to suggest trades and analyze user portfolios for better risk management. Let me tell you a true story that shocked Wall Street. In 2022, a fintech startup called Kensho developed an AI that analyzed financial news and immediately recalculated market impact predictions. During an earnings season, Kensho's AI read over 1,500 earnings reports within minutes and generated impact summaries that helped their partnered investment firms adjust positions before competitors even finished reading the first page. This was the moment when many realized AI is not just a helper, it's a game changer. But is this good for the world? Is it good for you, your job, your investments, your future? Let's think deeply. On one side, AI can democratize finance. It can give everyday investors access to deep analytical insights that were only available to institutional investors paying millions to analysts. It can reduce human errors and remove emotional biases that often lead to poor investment decisions. Imagine having an AI financial advisor that knows your risk tolerance, your goals, market trends, and global economic shifts, and rebalances your portfolio daily to maximize returns and reduce risks. That future is here. On the other side, if you're a finance student dreaming of becoming a Wall Street analyst, what does this mean for you? Should you quit your studies and give up? Absolutely not. Because while AI can replace the repetitive tasks of an analyst, it cannot replace creativity, leadership, negotiation, and strategy building. The future analyst is not the one who just reads data, but the one who knows how to use AI to make better strategic decisions. If you can master AI tools, understand how they work, and combine them with your human judgment and creativity, you become irreplaceable. You become the leader who commands the AI army. Financial firms are now hiring what they call AI-empowered analysts. These are professionals who understand finance deeply, but also know how to leverage AI tools to increase their productivity tenfold. This is similar to how accountants feared Excel in the 1980s, thinking it would destroy their jobs. Instead, those who mastered Excel became the most valuable accountants. The same is happening now with AI in finance. So what exactly can AI do better than a human analyst? First, AI can process massive unstructured data sets. For example, it can read 10 years of SEC filings, earnings reports, news articles, tweets, and economic data in seconds and summarize key insights. Second, AI can detect hidden patterns and correlations that humans might miss. For example, an AI might detect that whenever shipping prices from Asia increase by 20%, a particular retail stock's margin decreases by 4% in the following quarter. Third, AI can perform sentiment analysis at scale. It can analyze thousands of social media posts, news headlines, and executive interviews to measure market sentiment instantly. Fourth, AI can automate repetitive tasks, such as report writing, updating valuation models, and generating risk assessments, freeing up analysts to focus on strategic decisions. However, there are limitations. AI can only analyze what exists. It cannot predict black swan events that have no precedent. It cannot replace the emotional intelligence needed to negotiate deals or build client trust. It also risks amplifying market volatility if everyone uses the same AI models to make the same decisions at the same time. So what does this mean for you as an investor or future finance professional? It means you must learn AI literacy. Understand how AI works, what it can do, what its limitations are, and how you can integrate it into your financial decision-making process. If you are running a business, start exploring AI tools for financial forecasting, customer credit scoring, and fraud detection. If you are investing, explore AI-powered trading platforms, but always combine them with your human judgment and risk tolerance. Let me leave you with a powerful thought. In the next decade, it will not be AI replacing humans. It will be humans using AI replacing humans who do not. The analysts who master AI will replace the analysts who ignore it. The investors who use AI insights will outperform those who invest blindly. The entrepreneurs who integrate AI into their business models will outcompete those who run on outdated systems. Remember Eric, the young analyst we talked about at the beginning? He was smart. When he saw AI models being implemented in his firm, he didn't fight them. He spent his nights learning how they worked, reading about AI finance models, and understanding their limitations. Today, Eric is the head of AI strategy at his firm, leading a team of AI analysts and data scientists, building the future of finance, while others who resisted change lost their jobs. You have the choice today. You can fear AI and avoid it, or you can embrace it, master it, and use it to build the financial career or investment success you dream of. Thank you for watching. If you want to learn how to use AI to master your finances and build wealth smarter and faster, make sure to subscribe to this channel, turn on the notification bell, and leave a comment below about what you think about AI in finance. Do you think it will replace analysts completely, or will human judgment always remain necessary? This is Finova XI, and I will see you in the next video with deeper secrets of money, investing, and the artificial intelligence revolution. So as you've seen, AI isn't just a tool for analysts anymore. It is becoming the analyst. But here's the secret. AI will not replace analysts who know how to use it. It will replace those who ignore it. The future belongs to those who combine human creativity with AI power. If you want to master AI for your financial career or your investments, make sure to subscribe to Finova XI. Hit that notification bell so you never miss our deep dives into money and technology. And leave a comment below. Do you think AI will completely replace financial analysts in the next decade? I'll see you in the next video with deeper secrets of money, investing, and artificial intelligence.